Hi, everybody. Bill Bodner here, Mortgage Market Guide. Thanks for tuning in to our MMG weekly recap. So, January came in with the high volatility that we all expected at MMG, and mid month, it hasn't stopped. This particular week, we're getting push pull effects in the market. And as a mortgage originator, someone working in the real estate space, you have to watch what the Fed's doing and the economic reports that impact their policy. Because the Fed essentially gave us the incredible housing market of the last 2 years and we're tailwind. And now 2022 is starting to look like shades of 2018 when they could be a significant headwind. And remember, the Fed actually broke the back of housing back in 2018. And if they play their hand too hard in 2022, they could do it again. I don't think so, and nor do we here at MMG, but we shall see. So this week we have inflation, and it's price stability is one of the Fed's mandates. It's a problem. It's running at 40-year highs at both the producer level as well as the consumer level, and so the Fed has this bullish or hawkish tone about we're going to hike rates, we're going to remove. We're going to shrink the balance sheet and normalize it very much like they did in 2018. And that went so far until the stock market rolled over and housing rolled over. So this time around, though, things are a little bit different. We have retail sales come out today, and it was not very good because of inflation. People do not like the higher prices. And also because of consumer sentiment, again, because of the higher prices. So the reality is, well, how much can the Fed do with rate hikes without, because what they want to do is crush demand. They want to step on demand, and that would hopefully lower prices. Well, it looks like the consumer is already backing away from the higher prices as evidenced by that retail sales figure. So we're going to have to see over the next coming weeks and months, right? We're going to get to mid-March, and we'll have some jobs reports, some inflationary data, but those are going to be the figures. And can the Fed even hike 3 and 4 and maybe even more times, as some suggest? Not sure. And one thing for sure, they can't allow long-term rates to get too high. That should be a base case for you as a mortgage and housing professional, because for no other reason than we can't afford it. I mean, when we have $30 trillion in debt, the last thing we can do as a nation is allow interest rates to creep up too high. So the Fed does have tools that they can keep rates low throughout 2022. But it doesn't mean that over the near term you can't have incredible volatility. I hope this finds you well. Next week we have a lot of housing prints, and that should be quite illuminating. Have a great weekend. We'll talk to you soon. Bye for now.